Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin. Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work, so I think you deserve to have that. Okay, so just LME 3-month nickel, just to remind you once more, and it is a timely reminder given what happened 4 weeks ago. As I've said here repeatedly in this commentary for months and months, the most significant feature of this market has been the key lows of 2021 at 15,665, which led to the lows of late November 23, plus the lows in 2024, and I suppose also the congestion this year in January, February, late April, May, early June, and the high 4 weeks ago. I'd also add that for many months I've also highlighted how the 15,840 level, along with this low for 2021 at 15,665, was and is still a key level. So at 15,665, we saw moving down through it 3 weeks ago the gold long moving average, currently at 15,555, and a few weeks prior to that we saw this significant bright red upper time, currently at 15,330. The early October 24 to mid-March 25 bearish shift pitchfork, a key showrunner for this market here this year, along with the mauve medium moving average, currently 15,315, also moving down through it. These are now challenging the next congestion below each of them, the 50% Fibonacci line for 2025 at 15,325. Finally, we also have a close into the market 2 weeks ago acting as resistance, then last week acting as support, and now this week acting as resistance, the slowly declining green short medium moving average, and that's currently at 15,180. As I've said repeatedly here before, looking at them all together, some of these are some pretty heavy duty resistances which had earlier capped the market. This shows up with what happened last week when prices chose to test up to the congestion area from about the 50% Fibonacci level at 15,325 and get turned down to the November 2020 low below at 14,935. The market indeed had a few weeks prior pierced this support but did not stabilize below it, though it again still looks very vulnerable. If we take a step back and look at the bigger picture, I said 5 weeks ago, and I quote, "Over all of the recent action, we have the bright red early October 24 to mid-March 25 bearish shift pitchfork in charge. The question is whether the bright red upper time can withstand the pressure building up to challenge it. If it does, then," and I quote earlier, "the hesitation we saw in April and May ahead of the 16,000 to 16,780 area was enough that we can look at the mid-April to end May action as a double top pattern, even Eve type." 7 weeks ago, so that is now 11 weeks ago, so we reached and breached the neckline for this pattern down in the 15,200 level, just below the 50% Fibonacci line for 2025 at 15,325. End of quote. Now I further added, and I quote, "You would need confirmed consecutive closes below this level to contemplate the downside. But whilst I cannot set targets below, I can indicate potentials. Thus a primary potential after a confirmed break lower will be down in the 14,835 zone, so not too far, whilst the secondary potential lower will be down in the 14,380 zone. I say again, these are just potentials, but ones that might come about as targets if a move lower happens before I get a chance to comment next time." End of quote. 9 weeks ago, we tested lower to the new lows at the time, and leading me to clarify the status of these two potentials. Thus, we had a primary target reached 5 weeks ago down in the 14,835 zone. The secondary, harder to reach target X1 down at 14,380, which is still live. I added to this 3 weeks ago, and I think these comments still matter, and I quote, "The secondary target X1 is once more, if not directly under threat, then in the region of being threatened. Only a concerted move over and subsequent stabilization over the combination of the bright red upper time and the gold long moving average would lead me to reassess the viability of the secondary target X1 that is below." End of quote. These words still stand, and I watched the market in the bright red upper time and the gold long moving average with great interest as they slide lower each day. LME 3-month zinc. Much like LME aluminium, there had been here a number of patterns affecting the market in recent times, all happening at the same time. The first is the thoroughly broken, but even now still refusing to die, old dark blue May to August 2023 bullish shift picture that subsequently acted as an August 23 to April 24 bull channel, especially the lower and middle tie-ins. This one still will not die, even when I thought 19 weeks ago that finally expired. It came back like a high-functioning zombie, influencing and impacting the market, especially the dark blue lower tie, currently at 26.97, and more recently the dark blue middle tie, currently at 28.61. And I'm looking at them possibly as being a channel now. And that dark blue middle tie had the declining gold long moving average, currently at 28.23, crossing down through it 3 weeks ago. Next, looking below, well, as I said 10 weeks ago, and I quote, I'd keep an eye on the declining green short medium moving average, currently at 27.45, and mauve medium moving average, currently 27.12, plus what I suspect may be a key level, the 50% Fibonacci of the whole March to April move at 27.55. This is not the whole of the 2025 action, just the whole of the major move in the last few months, and that's the end of the quote. These three in the past acted as a base of action for the last sweep higher, and did the same 2 weeks ago, and look like they might start doing the same again this week. However, over all of this, I said 5 weeks ago, and I quote, so we're finally left with a choice on interpretation of what the whole late March to date drop and hesitation might be. Is it a basing action for a possible future attempt higher, back up to the broken dark blue upper tie, currently at 30.26? Or is it a hesitation, a somewhat large hesitation, with potential down to the 23.10 zone? Right now it is not easy to say which, but I would keep an eye on the following: the short, medium and medium moving averages, and the 50% Fibonacci line at 27.55. They all have given a clue to a somewhat bearish future, but this has been countered by the big old broken dark blue lower time, which is still here. End of quote. Yes, the big old broken dark blue lower tie lit the fuse for the latest attempt higher late 4 weeks ago, but then the combined overhead gold long moving average and the dark blue middle tie dropped a whole load of sand 4 weeks ago, extinguishing it. And as I said 3 weeks ago, and I quote, may have extinguished at least temporarily the bullish incentive, end of quote. Last week I raised the question as to whether the nascent reactionary move back up 2 weeks ago was enough, and quote from my commentary from that time when I said, if, as I suspect right now, we may not have enough to make a higher high than the one we saw 2 weeks earlier, well then the pressure on the downside beckons, end of quote. This is where we are now, beckoning lower. And it also raises the possibility that the action since mid-July may be a double top with a possible neckline in between the August low at 27.11.5 and, you've guessed it, the dark blue broken lower tie. LME 3-month tin. Okay, so the big picture has been centered on, well, for quite a while, on the dark blue late November 24 to mid-April 25 bullish shift picture. We're once again in between the lower time below, currently at 36.20, and the middle time above, currently at 35.405. In truth, slightly closer to the underside of the middle time. Now, as I've said here many times before, much like some of the other metals I've discussed here today, there are a number of patterns affecting the market all at the same time. From the bottom upwards, we have the low of April and 2025 so far at 28.925, just below the July 2011 low at 29.005. I know it's a long way down, but it's best to make a note of it now than not. Next, we have the flatlining long moving average, currently at 31.860, which is support once again. Closer support is from the mauve medium moving average, currently at 32.885, and the nearer green short medium moving average, currently 33.285, though this latter green one is to my mind suspect. Then there's a purple neckline extension, currently at 32.765 of the April 24 head and shoulders continuation pattern. This had been a resistance in the past, but it now acts quite well as a support, as we've seen in July. Looking now very close to the market, what 2 weeks ago was resistance is now support, is a small but significant ingestion of the previous all-time high back in April 2011 at 33,605, and the close by 50% Fibonacci line for the whole of 2025 so far at 33,660. These two have been interfering with play and may do so once again, so watch out. Looking overhead now, and we have just above the next 50% Fibonacci line, this time for the March to October 22 move at 34,175. We then come to a close-in trio of resistances that are now separating apart. They are the dark blue middle time, currently at 35,405, the bright red neckline extension, currently 35,550, of the August to November 24 head and shoulders top, and the interesting, though I'm not sure how good it would be, bright green lower time, currently at 36,135 of the broken November 23 to November 24 bullish shift pitch hawk. I had been on the verge of retiring this last one for quite some weeks, but as it was broken back in April, but it just has seen some good action since as a dynamic resistance, so I thought it's still best to include it. I'm now on the lookout for the next pattern idea, which so far has not developed. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.